Joining us right now on the Fed under President Trump is Eric Rosengren. He's former Boston Fed president, now a visiting scholar at MIT's Golub Center. And let's break that down very quickly, Eric, what you think about that conversation. Some people will say, well, he didn't promise he wasn't going to remove him. But to me, the news was really that he said, no, he doesn't have plans to do it right now. What was your take?
My take was the same, that he doesn't plan on doing it. There's a strong reason for him. One, Jay already has been lowering interest rates, which is presumably the policy that he'd prefer to see. And the second is that he doesn't have that much longer on his term. And there's no reason to get in a legal wrangle about whether the president has the power to fire the chair of the Federal Reserve if he's going to get to replace him anyway within a year.
Right. In terms of what the Fed is doing right now, you mentioned they're already lowering rates. The expectation is that they'll do that once again next week. But then where do you think things stand? Because there have been more questions about whether the Fed would take a much more prolonged, relaxed look at things before they decide to cut once again.
Well, this is the December meeting, so we're going to get the summary of economic projections, which is the committee's forecast for what they're going to do in the next year. In September, they were expecting 4 cuts over 2025. My own expectation is they're going to lower that probably to 2. And that's going to reflect the uncertainty about what fiscal policy is going to be in the coming year. And also that if you look at core prices, we're going to get the CPI on Wednesday, but core PCEs flattened out at a level that's a bit higher than they want. So over the last 6 months, it's been hovering around 2.7, 2.8%. The inflation target's 2%. So there's a pretty good reason for pausing, both with the fiscal uncertainty and with the fact that core inflation has not come down quite as quickly as they were anticipating.
Still, would it shock you if they didn't cut rates at this meeting next week?
I think if we got a surprise on the CPI report and the CPI was much higher than expected, that it's a possibility they won't do it. I think there are going to be some members that are going to argue for starting the pause now. I would have expected more communication up to this meeting if they were actually going to start the pause. But I think this is a period where a big surprise in the data actually could make a difference. But if the data comes in about as expected, then I would expect they're going to do this cut, but make it kind of a hawkish cut. They'll say that core inflation has been running at a sustained level higher than is consistent with the 2% inflation target, and they're going to pause policy until they see more progress.
Eric, what would you be doing if you were still in the seat? How would you vote this time around?
I would be arguing for a pause at this meeting.
And that's because which data points you watch? Because you have the ability to always change and go back later, or because you really think that the next move is going to have to be higher?
I don't think the next move will be higher unless the fiscal uncertainty has some surprises in it. So normally fiscal policy doesn't make much of a difference for monetary policy, but this is an instance where there are a lot of significant changes that may occur, some of them fairly quickly. So on the positive side, you have deregulation, fiscal stimulus, and lower taxes. But on the negative side, the immigration policy and tariffs could be inflationary. The policy's not completely clear at this point. I don't know that it's going to be clear in January or February either. It's probably going to take some time to see what that policy is, but it likely will make a difference in how quickly inflation comes down.